Hey guys, it's Will. Hopefully you're having an amazing day today. In this one, we're going to go over the top four data center companies that we're watching here into 2026. So these are the top four data center builders, the companies that are building the infrastructure for data centers. Now, why is that important? Well, Apple just announced in their earnings they're planning to spend nearly $1 trillion over the next 5 years on data centers. Microsoft is investing a huge portion of their current revenues and their current cash flows back into data centers. If you look at Tesla, there is a world record for how big the data center is being built there for Elon. It's called the XAI Colossus. So Nvidia is investing huge. In fact, a large stakeholder in almost all of these companies that we're about to go into. And you're going to see it. Google is a big name in there, one of the main names for investing into this infrastructure. So don't just take it from me. You could look at any of the earnings calls, any of the announcements from any of these large tech companies. They're all investing large amounts, if not majority of their investments are going back into building these data centers for the infrastructure to power AI. And can't forget about Mark Zuckerberg. He's investing huge. So much that he's having to look at nuclear options to see if he can find some innovative ways to power these data centers. And that's another topic. But look, the whole goal of this is to get you some companies that are going to be growing into 2026. And we just wrapped up our live trading this morning. The goal is to find companies that you can hold much longer, but also trade on the short term, create some more freedom for yourself. Maybe even get some companies you could hold. I'm looking at companies to buy and hold for the next 15 years or so for my unborn kids. That's the goal. So we're gonna jump into it. The first stock on the list is going to be APLD. All right, and then we got Wolf stock along with IREN, and we're also going to jump into where is it? NBIS over here. But the first stock is APLD, and we go into 7 stages of analysis in just surface level, which could be broken down here, starting with the market. And before we do too, as well, APLD, we traded it this morning. I don't know if you guys could see my recent orders. If I can move this up, maybe. Let me see if it lets me move it up. But we traded APLX and APLD this morning, and we bought in at 29. Sold at 31 this morning for a profit of $500 at market open. If you guys ever want to tune on in, it's the second link below for those sessions. But here, let's get into it. The 7 stages starts with the market, and there's 2 stages in the market stage. The first step in the analysis is looking at the data center market. We kind of just went into it. Apple's investing more. Nvidia's investing more, Tesla's investing more. You can see all of the capital, all of the money jumping into these data center companies. And you see that over the last year. A lot of these companies, like APLD, for example, just $3 a share. We're going to get into IREN in a moment. They were just at $5 a share. And you can see where they're at now, up to that $45 range. Wolf stock, similar. Just over the last year, they were at $2 a share. They're now up to 12. And so this is a large scale capital investment from big tech. That's the first thing. Now, the second stage in the first step of market analyzation is going to be the real world usage. And so the real world usage is usually measured by the finances, but not always, because you have investors, you got people buying things, but is there actually real world value? And the answer is a resounding yes. You see a lot more usage on ChatGPT, a lot more usage on Gemini. You yourself, you probably use some AI tools. The AI is not just on the consumer level, it's on an even larger scale for the business level. And we see the real world usage kicking in, and the compute demand is higher than the current supply for all of these data center companies, and they don't have a demand problem. We just listened to APLD yesterday. That's why we were able to find that new trade and trade it yesterday, is because we found this unique sell down right at market or right at earnings, and they sold down pretty aggressively and then recovered pretty large. And so when the markets, you have capital investments looking good, those things line up, but then you see a big correction like we saw here at earnings. It was yesterday. We bought down here around 29 bucks and saw it surge and sold this morning for a profit. Then you get to see those opportunities where the pullbacks mean more opportunities. So for APLD and all the data center stocks, that's how the market looks in the first two stages. The third stage, we're going to be looking here at the news, right? For data center companies like APLD, let's see how it looks, right? They've announced over $15 billion in building these data centers. One of their top customers is CoreWeave. They've got a 15-year lease there, which has been increased to about $11 billion. And just in their earnings they came out with yesterday, that reflected. The other news that we've seen come out with them is they not only just announced earnings, but they also have this new company that they just acquired or started to work with and integrate with, which is a liquid cooling company. So they do liquid cooling. I think it's Exo or Chronoscale, or maybe it's another one of these companies that they're actually getting into the hardware side, or the actual mechanisms that make up the inside of the data center. So right now, they're mainly constructing the actual data centers. They're ensuring that they are building the data centers in a timely manner. They're getting them ready for housing GPUs. They're strategically placing them in places like North Dakota, which in their earnings call yesterday, they did say that they had no problem building throughout the winter, so that's good. They're strategically, placing them near wind turbines and solar and things like that, which make the energy usage more efficient. And they are also partnered with Supermicro Computer, Nvidia, Intel, and others. So that's how the news looks. Then you get into stage number 4, which is going to be the financials. Now the financials here look pretty good. In fact, this was their last quarter, but they just came out with their revenue this quarter. They went from 64 million here to actually increasing. They just reported earnings yesterday to $126 million in revenue this last quarter. Just came out yesterday. Their net loss was down to 31 million. Okay, so that was an improvement really year over year. We've seen them down as much as 139 million. So they came in with a narrower negative net income, which is good. And their earnings really came in hot, came in good. So that is the financial side, is that their revenue is increasing. Their balance sheet has been increasing. They got a couple billion now in their balance sheet with liabilities lower than their assets. And then the other side of this is their market cap, 8.9 billion. If they continue to secure these billions of dollars in data center deals with CoreWeave and others, you're going to see that the real market cap potentially could be up into this 30 billion plus. Because think about it, they currently already have billions, 15 billion or what have you. That number may grow. To see them valued at between 12 to 15 billion would make a lot of sense. That would put them between that $40 to $50 range. But to see them get up above their current pipeline in market cap is also quite common. So they might even get up to that, $30 billion dollar price point, which then we're seeing, over $100 a share most likely. So there's a lot of hype. You see a lot of that. And so just kind of stay clear of that, because there's also volatility. Be ready for that. But overall, great opportunity to trade it. We actually were able to capitalize on it, make a nice $500 today, earlier this morning. And we got to check out some of the other companies. So that's the fourth stage. Then the fifth stage is going to be the technicals. The technicals here are quite interesting. The last year, you see this considerable uptrend from $3 a share and continuing up into this $32 range. They're on their way now to make it up into that $40 range. They touched up to 35 today. And we were expecting, we had some targets come out in Stockmate here, which is our daily live trading session. We had some targets come out where we were actually anticipating that they get into the low mid 30s to potentially high 30s. and we saw them get above 35. They were at 25 when we made these projections here in StockMate, ahead of their earnings, as we do that with all earnings that are notable. And that's exactly what kind of happened here, which is good to see. So they're staying true to pattern. If they do stay true right now, they have a resistance at $34, $35 and looking to get up into that $40 range, which would be about a 25% increase from here. And then, of course, there's volatility. Maybe we see them sell back down. They could do that. But, long term and into this medium term, pricing in for the new data centers they're building, this would make a lot of sense. And my approach to analysis, through this fifth stage, has been very solid for us this year. We've been able to have almost 6 companies that we have gained over 100%. AMD is literally 1% away. Lunar is almost there. Black Sky is almost there. But we got almost 6 companies that have more than doubled for us this year, right? So with this analysis that we're doing right now. And so the stage number 6 is looking at the profit, right? The plan. So currently you see them at this resistance level. They are getting slightly rejected after that large surge they had this morning. You could see them here at this resistance here, where they just kind of got rejected and sold back down. The nearest support level that they're going to find here is probably going to be about this $30 range. You might see them sell down as low as $30 here, as that's kind of the nearest previous resistance level that may act as a support, but most likely holding above this $30 range, and we're going to see them consolidate through here, maybe even sell down first before continuing, or they break out early above that $35 range. But really, we're looking to get up into these levels around that $40 price point, which again, is about a 25% increase from here. So that's the profit. Now, the 7th stage, the risk here. Now we've gone through the market. We went through the analysis of the financials, the news, and the chart, and now we're looking, profit. That's what it looks like, potentially 25%. The risk here, that sell down to $30. That would be about a 5-6% sell down. That's the risk here. And then greater risk, if market conditions were to go ARI for a moment, you'd be looking at potentially sell down into that $23 price point, because that's the greater overall trend that we've seen over the last year that potentially they could sell down to. But after the earnings they had today, it'd be making sense to see them hold above that $30 price point there for APLD. So that is the first one. We went through the 7 stages. Now, for the 7 stages that I just went through with you, there's actually another 3 levels in each stage that I could go through. There's a lot more levels to the financials. There's 3 levels. There's 3 levels to the markets that we went into in those stages, along with the plan and the profit. And so there's actually 21 that I've mapped out for me to be able to find profitable investments and build a portfolio that's growing. And the only way that I've been able to repeatably do it fast and on track with the same way I do my analysis is with this new revolutionary AI system that I've created with our team. And it's called, basically what this does is it's using my proprietary strategy and my trading systems into the world-class AI models like Grok and OpenAI and Claude and Gemini, so that I can avoid any analysis paralysis or having to re-research and go through those things over and over. And so the key here to building your portfolio is this system. This is what I'm using throughout 2026. And I believe it's only attainable through using Prophecy AI's machine here that I can get the repeatable, quick analysis of all of the stages in an instant. And so I'm actually going to use it for the next stock that we're going to be analyzing here. And if you want to join the first access list for this tool, you'd like to get it in your investing, then go ahead, click the first link in the description down below. It's totally free to join the list so you don't miss it when it comes out. So here we are. Let's get into it. We're going to search the next one, which is WULF. This is TeraWulf stock. And boom, we got it going on. All right, so couple things to note right off the bat. We got some bullish projections. That's kind of the third stage of the profit and analysis. But getting into the technicals, getting into where things are at here and into the support zones is what's key. You can see that it's identifying a support level here around $10 a share. That seems to be the weak support, with a stronger support around $9.30. The technical analysis is saying that there's a resistance here around that $13.35. They're going to be looking to break out above. Now, in that analysis, when we pull up Wolf stock and we can kind of see the levels they're at right now, does that check out? Let's see. The $13.50 resistance is super clear here. You could see that here. $13.35 resistance is what it was talking about here. Look at that. You got these levels that it's going to have to break out above. And then you got the support here around $10. So the $10 support that we're seeing here is the longer term time frame. That's going to be down right around here. You can see that level there. Okay, so what we could do is draw this out here, just like this. All right. So this is kind of how it's looking. In fact, you could even kind of see the horizontal levels, you could say, in that greater uptrend, right? This level right here. So possible that it holds and continues to rally the way that it's rallying, but you do have these side-to-side levels that you'd want to watch. See that previous support here, previous resistance, a little bit of volatility, some supports, and some consolidation through there. And that's kind of what we're watching. So in that first stage, again, the market's growing, real world usage is good, but with Wolf stock, here is the news. Let's get into the news stage. So Wolf stock has had some growth for a few reasons. Okay. The first reason why they're at this $5 billion market cap is they recently signed some deals to build data centers for Google. Okay. So Google's a large investor in the company, and they've been focused on building data centers for these large tech companies. And you can see what they look like. You know, they're strategically placing them. We've also screenshotted some of these different GPUs, and a lot of these GPUs are getting great usage and are well equipped to support the future. But you can see, again, they're building the data centers, they're getting things together, they're strategically placing them near places that have enough power to support the infrastructure. And then you can kind of see where they're focusing. They're doing sustainability as their main focus, as zero carbon future with the amount of renewable energy generation. Okay, so that includes the focus on energy consumption. The energy consumption that they're using here is going to be less impactful, or not a negative impact on the environment, but actually focusing on making communities better as a result of the installation of their data centers, which we all know could be controversial. But I believe that as long as they say that, I think it's basically good that they do have that as their mission. And I'm not going to bat them for it, because I think it's actually really good. When you get into the company news and kind of what they've come out with recently, you could go to the third parties. It's probably not the place to go. Probably want to go into their press releases. So they got some project financing for 168 megawatt HPC. So HPC, you're going to be looking at these data center, AI data centers here. They've raised considerable amounts of money, including over $1 billion here, $500 million here, $900 million up there, $3.2 billion senior secured notes there. And they've had some recent announcements that they have some 10-year AI hosting agreements, as well as some news around working with Google on building out data centers for their cloud. And you can see that 70 megawatt data center infrastructure for G42 US operations. And we're getting back here into 2024 even a little bit, as they've had some other contracts, but mostly they've been raising a lot of money. Now, they just came out with their earnings with what was a rack of losses in their net income. Now, these net income losses that Wolf stock recently came out with, you know, historically they used to be in the crypto market, right? That's why they have all this infrastructure. And so the earnings that they had while they're AI driven, you also, they're in a transition story right now from more of the Bitcoin focus to more of the AI demand. And so with that, it's higher risk than the other company. The other company, APLD, we saw better, increased revenues. Here, they've increased revenues not 250% like APLD, but about 86% year over year, while net income has dropped significantly. Quarterly, they're still green with their assets larger than their liabilities. So news looks good. You see them building, securing more capital, getting these data centers out. But the reality is the losses are pretty significant and the profitability is still not there. So it's why I kind of didn't want to cover them first. But overall, we look at their levels here. They're on an uptrend. They got some resistances to break out above around that 1350. In fact, when we're looking at the Prophecy app, let's see how it looks here on the near term. It is anticipating that they are going to see some resistance, that they are going to be getting rejected according to the Prophecy AI machine here. So again, this is with Grok. This is a world-class model. It's the latest model available. And you can see that there's some negative projections there into the next day, actually projecting a sell down and hitting some resistances, currently selling back down to that 1275 range. Let's see how the next 6 months look bullish, and into the next year looking bullish up to that $15 to $16 range. So the longer term is looking good for the company, which is why we have them here as one of the top 4 data center builders. Okay, so profit. Let's get into that third stage. What does it look like if you're going to enter a trade personally? I see them as higher risk, might even see a sell down into this $10 range as we just talked about a moment ago. That would be a 20% potential sell down. You have the chance of seeing them rocket up, into these levels, but not without, I think, some catalysts from earnings. They were rocketing up, doing quite well. Then when they came out with their earnings, things got really shaky, very volatile. In fact, they sold down around 35%, rocketed back up 35%. So the volatility is high, and I wouldn't enter any short-term positions. You can see that RSI MACD kind of just peaked out a moment ago, and that they may sell back down at least to $12. And that's kind of what the Prophecy app here was also anticipating in the near term. So again, that's just our analysis. In the long term, things look good. They got a good trajectory, but again, they might sell down as much as 20% from here before continuing in that overall direction, because their market cap is pretty high compared to the negative losses they had, and we'd like to see that catch up in their next earnings. So number 3, we know that Google was using, investing in Wolf stock. We know CoreWeave investing in APLD, right? But there's a stock here which has seen a very large leverage from Nvidia GPUs, and that's going to be NBIS stock. And NBIS, last time we were analyzing it, we're looking for a potential surge of about 60% up into over $130 a share. Since then, we actually saw them gain about 20%. But now they're at this resistance level here, and we'll get into that in a moment. But they've had some explosive growth because not only are they working with Microsoft and Meta, but they also have seen the revenue explosion on their stock. You see their revenue has gone up over 355% over the last year, and annually up over 462%. The net income still negative a little bit, but they came in with revenues of 146 million, which, it's funny, they actually came in with financials that were not even as favorable as, for example, APLD. And APLD is only about 1/3, the market cap of NBIS. So I do like APLD. That's why we cover them more. And they do have a pretty high valuation right now of about $24 billion compared to their revenue of just 146 million. But they've had some really high growth, data-driven community analysis from the GPU market. In fact, they've had some partnerships as a result, and you can see those materializing here. So this company, yeah, they have some massive growth over the last year revenue wise. You can see they're building these data centers here in Iceland, in France, in Missouri, United States. And you could see that they are working with Nvidia. You can see offering Nvidia Vera Rubin NVL72 in US and Europe. NBIS AI Cloud delivers next generation Nvidia Blackwell Ultra Compute with transparent capacity. So basically, the most innovative chips from the AI market are available through GPU access via NBIS. And so a lot of large companies, other businesses, not their businesses, but other companies are using, well, probably their businesses too, are using the AI growth here from NBIS, and they're using the infrastructure, which takes a lot of time, takes a lot of capital. In fact, this type of company I would use to run the Prophecy AI. So let me search in the machine here. Let me search this stock as well. NBIS is going to be the company. See some of the projections here. We'll wait a moment as it loads up. But you can see they're projected to get over $100 a share. Now, that would be continuing up. But the market looks good. The news looks good. So they're working with Meta, and they're working with others. However, when it comes to the press releases, the shareholder meetings, everything else, they've had the AI cloud, the token factory, all these things, but their revenues actually are still slightly smaller than you'd expect for their current market cap. So when we look at the investor hub, let's see here, the latest press releases, again, you got some really good news, a lot of different partnerships that would lead us to believe they're going to see more growth in the AI market and securing some more funding as well. However, their current financials look like they're lagging a little bit to their market cap, which is why we could see some pullbacks. So again, they're at a resistance here. We were kind of anticipating the surge. Perfect bull run. They get up to $140. Most likely they're going to see a sell down here. High valuation, heavy losses. There's a credible thesis that the stock has the hyper growth, even though they are high valuation, but I do think they have a high execution risk, which, while the infrastructure is being built, it's also going to take more time to scale their profits, which you have to just take that into mind. So it's kind of a cautious pick here. We could see them continue to rocket up to that $100 range, but again, they've got the volatility, and we'll see if they continue this overall trend. I'm not going to be entering any short-term trades because I do think, while they have that upside there, there's probably a little bit more risk currently on the short term. And we kind of could see as well with Prophecy. Let's see how it looks. So bullish into the next year, bullish in the next 6 months, anticipating up into that $120 range. Bullish, a little bit of a correction on the near term. So that's kind of what I'm seeing, that near-term correction, maybe down to that $98, $97 range. And you could kind of see that level here. So getting rejected, that's kind of what Prophecy AI is seeing there. And even into the next week, kind of anticipating they could sell down with the support at $92. So that $92 support level would put them down right around here. So that would be a pretty worthy sell down, right? They would see quite a little bit of a sell down here down to that 92. That would be a previous resistance level here that we saw established back in late December. And this would be kind of where they'd probably settle down around. And I think that makes a lot of sense. And as far as short-term entries, I wouldn't rush anything on the stock, but I do like watching them very long-term. So they're probably going to be one of the top AI company data center builders in the future. Now, there is one company that has been getting more momentum, and we've covered it a little bit. And they are AI plus Bitcoin plus kind of renewable data centers. And that's going to be IREN stock, IREN. And so they have a dual revenue model. In fact, they're working with Bitcoin mining, and they're also working with the AI cloud services. And some of the projections we have here on IREN anticipate that they could get up into this $50 range to $70 range or even $80 range, which we were projecting that level about a week ago, that 50% increase. Since then, they've made about a 10% increase here up into that $45 range from 41. So they are in a nice place right now with their recent builds for Microsoft as they secured a $9.7 billion AI cloud contract with Microsoft. This is huge. So you can see their data centers. They do co-location, so helping you with your data center infrastructure, and then they also do custom builds of data centers for you, and that is what we see them doing for Microsoft. And so these contracts, the multi-year, even with a prepayment from Microsoft, comes out nicely, and we can just get right into the financials, which is they came out with a net income positive here of about $384 million with revenue of $240 million. So they jumped big time in their revenues. This company might have the best looking financials in comparison to all of them. They came in with a positive net income, meaning cash flow positive. They've had a cash flow positive year over the last 4 quarters. And they came in with revenues of $240 million, growing the revenue by 355%. When it comes to the balance sheet, they're up to over $4 billion in assets. And that short-term and cash investment number is impressive as they're up over 1,000, just under 1,000% year over year. So their liabilities much lower, their debt much lower than their assets. And that's what you want to see. You don't want to be with these companies, watching these companies that have more liabilities than assets. It's high risk. It's high. It's not even high reward. It's just high risk. Watch out for those companies, because when it comes down to this company, for example, they got some of the price exposure to Bitcoin, which is a good thing. I think that's great. In fact, I hold about 50% of my net worth in Bitcoin. I'm a Bitcoiner guy. And when it comes to the investments from the company strategically into working with Microsoft, it's a $9.7 billion deal. There's probably more where that came from if they continue to execute. And so we can look at some of the analysis. I actually would like to pull this up and let me get an analysis here from Claude instead. But when we're looking at the compared to the peers, the other companies, right? They have at some rate they could be considered overvalued with a $13 billion market cap. But really, I think that they have much more favorable financials, strong revenue growth, and a reasonable valuation. And so out of all of the 4 stocks we just went over, this company has the revenue today, which is good, but they have the profits in sight right now, and they got powerful long-term catalysts like the AI and the cloud infrastructure growing on top of their already successful Bitcoin segment. So if you want, a blend of growth plus some of the real cash flow already showing up, then this is probably one that is a hold in that instance for the long term. You do see them continuing up, breaking back above this EMA. And in the short term, we see them kind of surging and potentially targeting up into, once again, this $50 to $60 range with a potential sell down to 39. Let's see what the Prophecy app has to say about it. Let's see. IREN. Here we are. Okay, so nearest support level that they're saying for the long-term time frame is at 26. How does that line up? Yeah, so they're saying if there was a very long-term potential sell down, maybe they could sell down to 26. That would be a very conservative sell down here, right? Something like this before continuing up. They rallied up to $80, see them sell down. That would be a pretty conservative look. But when we're looking at the next month, we got a 4.8% analysis here. Let's see if we get the full breakdown, as I would like to see that we could see that working. Okay, next hour, bullish. They're actually anticipating into the next month up to $49 range. We could see into 2026. Look at that, $64 projections from our AI. So once again, a 42% increase. Not only have we had, we've had 4 stocks here, 100% gain, 100% gain, 100% gain. We've had fairly aggressive approach, but fairly due diligence infused approach, and things have worked well. But look at that, in AI really projecting a 45% annual increase on this stock IREN into just 2026. When in life have we had the ability to have a strategic approach? And this changes the mindset. This shocks the mindset of a lot of people. I got this book right next to me. And so anyway, this is what we're watching. You can see the projections. If you want these projections just like this, you can join the first access list for the Prophecy app. It's down below in the first link in the description. But ultimately, I was just picking up this book, Benjamin Graham here, Value Investing. And I've looked at this book for a while. And one of the things that I noticed about this book is that, the financials are something that you don't want to overlook. There's the approach, and it also talks about the different crashes that we've had, like the crashes of, the Great Depression. And I think there's some revisions here potentially on the .com bubble as well. But, if you think about, figuring out your investing for yourself, like, where has there ever been a time where I get on the phone with investors every single day? I talk with investors every single day, whether they're in Stockmates or daily live trading, or I'm just on the phone with consulting clients because I work with investors all the time. And the number one thing that's shocked investors this year and the last 2-3 years is that there's become these proven methods of investment that yield over 3-digit percentage returns that you can gain in your portfolio faster than we ever thought possible. In fact, it's so funny because, and this is why it's so important. There's another book that and you guys have heard this, and I'm about to say it, but screw index funds. Okay? That's what I'm going to say. Screw them. Because if you look at, Warren Buffett, right? It's so crazy, but have you ever heard the quote? And some people have heard this, some people have not. But it is, the reality is the people that can think about what they're thinking, right? That's a very high level of intelligence. Whenever I talk to an investor, if I know they're a really good investor, I get on the phone with them and I say, yeah, what were you thinking in that moment? And they don't know. They're like, I don't know. I was just, then I'm like, okay, this guy doesn't really know. But if he's like, well, here's what my thoughts were, and they can actually talk about what their thoughts were, their thought process, and what they're thinking, and they can see their thoughts, and then they can look at their beliefs and look at what their thoughts process is, that they're looking to grow their portfolio and how they're thinking about it. That's a high level of intelligence. And Warren Buffett, for example, the reason that he always says buy index funds is because most people don't have the ability to look at their ways of thinking and correct course, and they get sucked into the things that were so big in the late 90s and even probably big today, where everybody's saying, buy this stock, and they get the phone call, hey, you got to buy this stock, and you've seen the Wolf of Wall Street, and you've seen that. It's the past, and people are getting smarter. You're getting smarter, you understand. But what is the quote? The quote is, watch what they do, not what they say, right? Copy what they do, not what they say. And so with Warren Buffett, you hear him say index funds, but who was the mentor of Warren Buffett? Was Benjamin Graham. Benjamin Graham taught Warren Buffett. Okay. So Benjamin Graham talks about individual stock picking. And how did Warren Buffett make his success? Did he invest in index funds? No, he actually picked individual stocks. That's how he had his success, is picking individual stocks. And so, what I'm saying is, the reality that people have in their mind about, I should just invest in an index fund. This is so impossible to make returns that are higher. The index funds, I think, exist, and people have been brainwashed because of the fees involved and that the people that put out those messaging in over the last 50 years wanted to make money from people to invest in index funds, and that there was also truth about index funds being better when you didn't have access to the information immediately. Nowadays, we could get that information and we can see behind the curtain, and we can even take that information and we can even have AI do that information or do that research and find that information for us on autopilot. We can even, not only can we get the information we weren't able to get, we can have AI go get the information for us and do the analysis in the way that we have to do it to find profitable investments. Like, when you see the game like that, everything changes for you. And so I want you to avoid the analysis paralysis around finding all these different stocks. And I want you to realize that the key to building your portfolio is going through the stages of the analysis. So hopefully this was helpful for you. If I earned your thumbs up, hit the like button. If you would like to automate the process with AI, I believe the only attainable way I've been able to do it repeatedly and fast to build my portfolio has been using the Prophecy app and the machine. And if you want to get on that new revolutionary new system in the first link below, go ahead, join the list. I'll see you there. Thanks so much for watching. Comment your top data center builder stocks below. Do consider subscribing, and I'll see you in the next one. Take care.